Strong demand for computers spurs a rise in quarterly profits at computer chip maker Intel, but its earnings fall short of what Wall Street had expected. We'll run down the numbers and ask Intel's chief financial officer about the outlook for this quarter.
Good news on March retail sales is seen as bad news on Wall Street. Investors fear a booming economy could trigger a hike in interest rates sooner rather than later. The Dow drops 134 points and the Nasdaq loses 35.
Also tonight, as Pacific Gas and Electric emerges from 3 years in bankruptcy, there are new challenges facing it. We'll ask PG&E Corp's chairman and CEO Robert Glynn about how rising energy prices might impact the newly solvent company.
Then, knowing who is doing your taxes may be just as important as having them done. With more and more Americans using tax preparers, tax fraud is a growing problem, and the IRS wants to stop it.
I'm Paul Kangas.
And I'm Susie Garrow. This is Nightly Business Report for Tuesday, April 13th.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
When financial consultants are free to do whatever's right for their clients tend to really appreciate them. A.G. Edwards, fully invested in our clients.
From the old economy to the new economy to the next economy, every business knows the importance of getting it right. We see business issues from every perspective. Deloitte.
Good evening, everyone. The revival in technology spending is alive and well, so says Intel. As late today, the chip giant reported an 89% jump in first quarter earnings. After the bell, Intel posted earnings of 26 cents a share on revenues of $8.1 billion. Those results were a penny shy of Wall Street estimates and included a $162 million legal settlement with Intergraph over a patent dispute. But while Intel is seeing growth in tech spending, Chief Financial Officer Andy Bryant says that the company is due for a bit of a seasonal pullback.
If you look at the second quarter, down a couple percent from the first quarter, which is absolutely consistent with years and years of history. Our view is we saw the economy provide strength last year, and the business grew at an exceptional rate. Right now, in the first half, we're seeing a consolidation. Not a pullback, but normal seasonality being played upon the stronger business levels we saw from last year.
As for the stock price, Intel shares ended the day up 7 cents at $27.67 ahead of the earnings news, and after hours, the stock was down about 40 cents from there.
Encouraging news today about the economy was discouraging for Wall Street. Investors sold off stocks on news of a much stronger than expected report on March retail sales and fresh concerns about higher interest rates. Here's Scott Gervey with details.
It was the best showing for retail sales in a year. Consumers apparently spending their tax refunds on a wide variety of items. Car sales posted a 2.1% gain, and there was an amazing 10.6% jump in sales of building materials and garden equipment, all connected to the explosion in home building and remodeling, fueled by record low mortgage rates. Overall, retail sales gained 1.8% in March, following a revised 1% gain in February. With consumer spending accounting for about 2/3 of national production, many economists reacted to today's report by revising GDP forecasts upward.
What we now have is a picture of a much stronger pace of consumer spending for the first quarter, and with it, frankly, a pace of real GDP which is a lot stronger, probably close to 5 to as much as 6%.
Few economists see consumer spending continuing at this torrid pace, but they believe it will continue to be strong.
I think it's safe to say that the economy is in a bona fide recovery, that consumer spending is reasonably strong, and that going forward we will have fairly strong rates of consumption spending before they taper off toward the end of the year.
While the financial markets reacted positively to the strong employment report 2 weeks ago, they sold off today in reaction to the bullish news on retail sales. Traders focusing on a belief that the numbers mean higher interest rates are now more likely to come sooner rather than later.
My experience is that the first 100 or even 200 basis points of interest rate increases are not mutually exclusive with a rising stock market. It's after that that you start to get into the period in the cycle in the economy where interest rates start to materially affect growth and profit. So I think in a short-term basis, you are overreacting. But what's going on in the market today shows the headwinds that the markets will likely be facing 6, 9, or 12 months from now.
Tomorrow we expect to get another update on the economic situation with the release of the Consumer Price Report for March. Scott Gervais, Nightly Business Report, New York.
As Scott reported, those strong retail sales spurred a sell-off on Wall Street. Even an improvement in the U.S. dollar was seen as negative because it could slow exports. Even higher earnings from Johnson & Johnson and Merrill Lynch couldn't stop the slide as the Dow fell to a triple-digit loss by early afternoon. Interest-sensitive sectors like the financials, utilities, home builders, and precious metals kept the market heading lower. So at the final bell, the Dow Industrial Average down 134.25 points, or a 1.3% loss, putting it at 10,381.28. The NASDAQ Composite fell almost 35.5 points, or 1.7%, to 2,030.08. Standard & Poor's 500 index dropped 15.75 points, or 1.4%, ending at 1129.44. Those retail sales sent bond prices spiraling lower, again on fears of higher interest rates. The 10-year note sank 31/32 to 97 6/32, bringing the yield up to a 3-month high of 4.35%.
A day after Pacific Gas and Electric emerged from bankruptcy, the stock of its parent company, PG&E, was down 98 cents today, closing at $28.45. Joining us now to talk about the outlook for the California utility, PG&E Chairman and CEO Robert Glynn. Hi, Bob. Nice to see you.
Nice to see you, Susie.
Well, let's talk now that Pacific Gas and Electric is out of bankruptcy. What kind of financial shape is it in?
It's got very strong balance sheet and forecasted very strong cash flow and an investment-grade credit rating that's got very good metrics. I would say very good shape.
And how about the legal problems? Are all of the legal issues behind you as well?
Well, there's always going to be a few more appeals to get over, but the bankruptcy itself is resolved. Creditors have been paid in full with interest, and we're on to the next chapter in the many decade-long story of Pacific Gas and Electric and PG&E Corp.
I know that while you were in bankruptcy that you still continue to provide the power needs of all of your customers, but now that you're out of bankruptcy, does that mean that your customers could be expecting higher power bills?
Actually, they'll be getting lower power bills. We've announced that we'll lower electricity rates for this year by about $800 million, most of which is due to the effects of settling out this long Chapter 11 proceeding. And there's also several next steps in the financial area that could lower customer rates even more. So it's a good outlook for customers. Well, our legislature in California is getting close to passing a bill that would enable us to refinance some of the debt that we sold very recently. Even though it was sold at remarkably low rates, it still could be brought a little bit lower by this new piece of legislation. We're a supporter of it, and if it happens, it will reduce customer rates over the next 10 years by quite a few $100 million more.
What is the status of that bill? I did hear that it was supposed to be, come up to be discussed or passed or voted on in late April. When will that happen?
Well, late last week it cleared out of, or perhaps the week before, it cleared out of the key committee that it had to get through with a 10-0 positive vote. There's at least one more committee stop, and then the Senate and the Assembly will have to get together. There seems to be a lot of enthusiasm in Sacramento because it's such a consumer-friendly bill, and it has our company's strong support at the same time.
We've seen oil prices rising. We've seen natural gas prices hit record levels. What impact is this going to have on Pacific Gas and Electric and its customers that you serve?
Not a large impact at this time. About a third of the power that we provide to our customers comes from sources that don't use either of those fuels. They come from plants that are either nuclear or hydroelectric. And of the balance, a pretty large fraction of those suppliers to us have already fixed out their natural gas costs, and there won't be big fluctuations. So the amount of exposure our customers have to increases in natural gas prices is pretty small.
Let's talk a little bit about your stock price. We see that your stock is now getting back to the levels that it was before the bankruptcy. You're in that $30 level, more or less. What is it going to take to get the stock price really growing from here? And do you have any plans to buy back stock?
Well, our cash flow situation is such that by the middle of next year, we expect to be in a position to declare and pay a common stock dividend in the second half of 2005, as well as have the potential to be buying back shares beginning at that same time. And we've discussed that at length in our disclosures and directly with our shareholders, and they certainly have those two major events to look forward to.
All right, I'm sure they will. Mr. Glynn, thank you so much for coming on our program. We really appreciate it.
Thank you very much for the opportunity.
We've been speaking with Robert Glynn, Chairman and CEO of PG&E Corp.
Jury selection got underway today in the retrial of Frank Quattrone, the former superstar investment banker. He's standing trial for a second time on charges he obstructed a federal investigation into stock allocation. Quattrone's first trial ended in a mistrial last October. Federal prosecutors say Quattrone acted with criminal intent in December of 2000 by urging employees at Credit Suisse First Boston, where he worked at the time, to destroy files. Quattrone has pleaded not guilty to the charges. He came to fame on the internet stock boom, taking stocks like Netscape and Amazon.com public.
The Walt Disney Company has agreed to a meeting on May 21st with some of the nation's largest public pension funds. The issue, the performance of Disney's embattled chief executive Michael Eisner and other corporate governance matters. Eisner has been under fire for months, and after a no-confidence vote at last month's shareholders meeting, was stripped of his chairman's title. Public pension officials from New York, California, North Carolina, and Ohio want to talk with the entire board. But it's still unclear tonight, Paul, just who from Disney will be present at that session next month.
Well, Disney stock today got caught in the downdraft, Susie, losing 70 cents to $25 even. Now let's take a look at our other stocks in the news tonight. Big board volume leader like it was yesterday, General Electric, today trading 18.1 million shares, stock down 62 cents. Then Lucent, 12-cent loss there. Nokia fell 40 cents. Time Warner, 47-cent loss. The Washington Post reported the SEC is preparing to accuse Time Warner of improperly booking over $400 million in advertising revenues. Pfizer, 28-cent loss there, fifth in big board volume. EMC managed to gain 12 cents, but Citigroup and the weak financial group down 86 cents. Hewlett-Packard dropped 38 cents. Another week. Morgan Chase off $1.52. Then ExxonMobil, 10th in volume with a 29-cent loss. Johnson & Johnson, one of the Dow stocks, up 19 cents. First quarter earnings were up 20% over last year to 83 cents a share versus 69 cents then, and that was 3 cents above the Wall Street estimate. Sales up a very respectable 17.7%. Merrill Lynch down $1.12 despite reporting a 95% boost in first quarter earnings over last year. $1.22 versus 67 cents a year ago. The street estimate was only for $1.07, so the stock just really got caught in the downdraft. Pepsi Bottling Group down 29 cents despite reporting higher first quarter earnings, 19 cents versus last year's 14 cents. That was 2 cents better than the Wall Street consensus. Tesoro Petroleum had a good day, up $2.48. The company's forecasting first quarter earnings will come in at 70 cents a share. The street estimate only 44 cents. Pharmaceutical Resources plunging $7.79. The company sees lower than expected first quarter earnings, around 80 cents a share versus $1.04, which is the street estimate. The company cites a shift in product mix and delayed introductions of 3 of its generic drugs. Foot Locker up $1.03. The company's going to buy 350 footwear and apparel stores from bankrupt Footstar Incorporated. The price, $160 million in cash. Leapfrog Enterprises did that today, up $1.58. Merrill Lynch upgraded it from neutral to buy in the belief that most of the bad news is behind the company. And then came the precious metals stocks down. Newmont, the granddaddy gold, down $2.40. The New York June gold contract in futures, $407.70. That's down $13.20 an ounce from yesterday. Intel topped the active list on NASDAQ, up to 7 cents, but as we mentioned, the earnings were penny shy of estimates. After hours, I saw it at as low as $27.19. Microsoft, a 16-cent loss. Cisco, 51-cent drop. Main Security, up $2.15. These security stocks are still the rage. Yahoo, down $1, fifth in dollar volume on NASDAQ. Amgen fell 25 cents, $2.20 loss on profit taking for Taser International. eBay fell $1.52, IPEX 74-cent loss, and Magal Security down $2.89 there. Group 1 Software up $6.19. Pitney Bowes will acquire this company for $23 a share in cash. And Spectrum Signal, look at that percentage move, 121%. The company got a $1.2 million contract from a defense firm that it wouldn't name, but over $1 million of business is pretty big for a small company like that, obviously. And MDSI Mobile Data up $3.01. At-Road Incorporated will acquire this company for $9 a share cash, or 3/4 of a share of At-Road, which is worth a little less than $9 as of today. And those are the stocks in the news tonight. Susie?
Paul, as you know, Thursday's the deadline for filing your federal income taxes, but most Americans won't be doing their returns. More than half now give that job to a tax preparer. Most of the time, that's fine, but there are a few rules on just who can prepare tax returns, and as Darren Gersh explains, that can cause big problems.
In courthouses across the country this month, the IRS is bringing in guilty pleas from tax preparers accused of helping file false tax returns. Under its Return Preparer initiative, the IRS targets dishonest tax preparers and then follows up by auditing the preparer's clients. At American University Law School's Federal Tax Clinic, Janet Spragans offers legal advice to low-income taxpayers. Spragans says 24 taxpayers have recently asked her to help with audits brought on by unethical tax preparers. In some cases, the tax preparer made up phony business losses on IRS Form Schedule C.
And they're audited and they say, wow, what's the Schedule C? I didn't read the return. I didn't know it was there. Now the IRS is challenging this business, but I didn't even know I was in a business.
Spragans says taxpayers should watch for red flags, like preparers who guarantee a big refund. Beware of preparers who ask you to sign a blank return or want the refund mailed directly to the preparer. And read your return, because in an audit, the taxpayer's left holding the bag. Nina Olson has seen it happen again and again. Before she became the IRS's national taxpayer advocate, Olson prepared returns, often helping people in trouble because they listened to the false promises of dishonest tax preparers.
And it was all presented in the way of, these are reasonable expenses. Other people do it. This is industry practice. Don't worry about it. The IRS never looks at this.
Out of roughly 1.2 million preparers, about half are what are called enrolled agents, already tested and authorized by the IRS. Olson says the other half are not required to be licensed and are not subject to minimum competency standards. But acting on her recommendation, the Senate Finance Committee has approved legislation to change that. The bill requires that anyone paid to prepare 5 or more returns a year register with the IRS. Preparers would also have to pass an annual exam testing their tax knowledge. The legislation does not include an increase in existing penalties, which Olson already considers too low, but that could change. Right now, she says the IRS only collects 12% of what it has levied.
And it sends the wrong message, since penalties are the main way that we are able to regulate right now return preparers.
Because the tax law is so complicated, more and more people are relying on preparers. Without them, experts say, we'd become a nation of non-filers. That makes reforming the system a delicate operation. Groups representing tax professionals worry efforts to track down unethical preparers could overburden the honest.
You can try and keep it balanced so that there's a reality check in this process and that you aren't imposing bureaucracy and red tape and taking the good preparers and putting them out of business.
Olson says there may be as many as 200,000 preparers who are now giving taxpayers bad advice. She argues it's time for a change.
I think that there are millions of Americans that are not getting accurate tax advice. They are not getting current tax advice.
If preparers are required to be certified, Olson says taxpayers will quickly get the message. If you want to stay out of tax trouble, use a preparer who has earned the IRS seal of approval. Darren Gersh, Nightly Business Report, Washington.
Tomorrow, a look at the business of health care and the role it will play in this year's presidential election.
Government regulators are launching a crackdown on pornographic spam emails. The Federal Trade Commission said today it's going to require all sexually explicit email to carry a warning label. It's also banning pornographic pictures in the body of those emails. The move helps internet service providers using spam filters to keep pornographic material away from minors. The new law goes into effect on May 19th.
The nation's mutual funds are going to have to spell out clearly their policies on market timing. The Securities and Exchange Commission voted unanimously today to order funds to make that disclosure. Market timing is at the heart of a slew of recent scandals in the mutual fund industry. The SEC says funds must also explain their policies for disclosing what their portfolios own.
Here's a look now at what's happening tomorrow. The February reports for the Consumer Price Index and the trade deficit come out. On the earnings front, Advanced Micro Devices, Apple Computer, Bank of America, Delta Airlines, and Texas Instruments are among the companies scheduled to report. Back now to the topic of taxes. Sharpen those pencils, get out that calculator. As we said, the deadline for filing your taxes is now just 2 days away. But what if you don't file? What if you suffer from fear of filing? There's an answer in tonight's Tax Tip segment. Here's Kevin McCormley, Editorial Director of Kiplinger's Personal Finance.
I've heard from several taxpayers, I guess I should say non-taxpayers lately, who are worried because they haven't filed returns in the last few years. How much trouble are they in? My first question to them is a simple one. Did you owe the government money or will you do a refund? And in every case, they tell me they always get refunds. It wasn't that they didn't have the money to pay their taxes. Heck, they already paid their taxes via withholding on their wages. It's just that they didn't get around to the paperwork. I love to hear that because then I can deliver good news. They're not in any trouble at all. In fact, filing those old returns will bring them checks from the U.S. Treasury. Think this is a rare occurrence? Well, think again. Each year, about 2 million people who should file to get refunds simply don't do it. Their money is waiting for them at the IRS, but it only waits for 3 years. Right now, about $2 billion in refunds is waiting for workers who didn't file tax returns for the year 2000. If they don't file to get their money back by this Thursday night, the government gets to keep it forever. Now, why would someone not file to get a refund? I suspect that in a lot of cases, folks didn't get around to doing their return on time, and then they're afraid to come forward. We hear so much about the dreaded April the 15th deadline, many Americans assume that pretty terrible things must happen if they miss it. Now, I'm sure you're not among those who need to file to get one of those old refunds. But is it possible that a child, an elderly parent, or an employee might be? Maybe you can help get the word out. Remember, filing for a refund, even if it's a couple of years late, is a good thing. I'm Kevin McCormley.
Recapping today's market action, good news on retail sales raises fears of higher interest rates, so investors sell stocks. The Dow Industrials fall 134 points, NASDAQ Composite loses 35 points. And please be sure to join us at our worldwide website, nbr.com.
And that's Nightly Business Report for Tuesday, April 13th. I'm Susie Garrow. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
From control rooms to clean rooms to boardrooms, it's experience that counts. We see business issues from every perspective. Deloitte.
When financial consultants are free to do whatever's right for their clients tend to really appreciate them. AG Edwards, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective. And made possible by the financial support of viewers like you. Thank you.
Use the latest technology to follow the story of human life from conception to birth. Discover life's greatest miracle. Tonight at 7 on Nova, only on Wisconsin Public Television. Now stay with us for the News Hour with Jim Lehrer.
It is possible to turn many collectibles into solid investments. You can find out how in NBR's home video, Mint Condition. To order by credit card, call 1-800-535-5864.